So imagine pouring, I don't know, 40, maybe 50, or even 60 hours a week into your job.
Oh, yeah, just completely draining yourself.
Right, putting in all that sweat and the stress just to earn a paycheck.
Yeah.
And then you realize that the money sitting safely in your bank account is, well, is quietly evaporating.
It's such a terrible
It
feeling.
really is. I mean, you put in the late nights, you build that foundation for your family, or maybe you're just starting to figure out investing.
Yeah.
But the moment the cash actually hits your account, this completely different anxiety kicks in. Like you've earned it, but how do you actually keep the value of what you just worked so hard for?
I mean, it is arguably the defining financial anxiety of our era. You convert your literal life energy into this currency, and almost immediately there is this underlying panic.
Oh, absolutely.
If it just sits there, inflation is going to chew away at it. So you feel forced to figure out what to do with it next, just so your hard work doesn't vanish into thin air.
And that tension is exactly what we're digging into today on this deep dive. We've got this highly personal, deeply reflective essay from an investor who details their journey.
Right, and it's quite a journey.
It really is.
Yeah.
They go from being a complete skeptic about gold, like someone who used to actively roll their eyes at the mere mention of it,
Which is super common, by the way.
right, to someone who eventually made it a core, unshakable foundation of their portfolio. So our mission today is to strip away all the flashing lights of modern investing to uncover the true function of this ancient asset.
Yeah.
Because as this investor discovers, gold isn't about what it earns you. It is entirely about what it protects.
And what's fascinating here is the transition this author goes through. It's one that a lot of modern investors really struggle to wrap their heads around.
For sure.
The ultimate realization they come to fundamentally rewrites how they look at wealth. They figure out that a growing bank balance does not necessarily mean growing purchasing power.
Which is just a massive distinction.
It really is.
But to really appreciate how they arrived at that conclusion, we have to start exactly where the author started. And frankly, it's probably where you, listening right now, might be sitting too.
Probably, yeah.
Initially, the author just completely ignored gold. They viewed it as this dusty, old-fashioned relic. When they first started learning about investing, their attention was entirely hijacked by stocks, derivatives, these highly modern financial instruments.
Well, and you can completely understand why. I mean, the modern financial world is engineered to be captivating.
It's totally by design.
Right. It's built on momentum, visibility, and these immediate feedback loops.
Okay, let's unpack this because I totally agree. I mean, let's be honest. Modern finance feels remarkably like a high-speed video game.
Yes, perfect analogy.
You log into your brokerage app, the numbers are flashing red and green, you get these immediate dopamine hits from a stock split or like a sudden price surge.
You get those constant, tangible rewards.
Yeah,
Yeah.
exactly. Quarterly cash flow, dividends, whatever.
Mm-hmm.
But buying physical gold, it feels like going to a store, buying a heavy rock, locking it in a dark drawer, and just watching it sit there, doing absolutely nothing.
Literally nothing.
Right. There are no fast-moving charts to obsess over. There's no thrilling stories of massive overnight profits that you can brag about to your friends.
And crucially, as the author points out in their early skepticism, gold produces zero cash flow.
Nothing.
Right. It pays no dividend. It doesn't yield interest. It literally just exists.
Right. And I have to push back on this concept because reading the essay, I was right there with the author's initial doubts.
Sure.
If an asset produces absolutely nothing, aren't you just relying on the greater fool theory?
Ah, the greater fool theory, yeah.
The idea that I'm going to buy this shiny rock today and just cross my fingers that some other fool is going to pay me more for it 10 years from now. I mean, how is intentionally buying a non-productive asset a sound financial strategy?
That is exactly the friction the author wrestles with in the essay. Yeah. When they finally made their first very small purchase of physical gold, and by the way, they emphasize they did not buy it to trade or speculate.
Right, they just bought it to hold.
Exactly. They held it and thought, why am I putting my money into something that generates zero return?
It feels wrong.
It does. But breaking through that skepticism requires understanding a massive modern bias we all carry. We have been trained, like almost indoctrinated by the modern financial system to exclusively hunt for yield.
Wow, yeah. We're told our money always needs to be working for us.
Precisely. If your money isn't earning a percentage, you feel like you're failing.
Like you're losing the game.
Right. And while seeking yield is a vital concept for accumulating capital and growing wealth, it creates a blind spot.
How so?
Well, it trains us to evaluate every single asset through the lens of cash flow.
Mm-mm.
If your only metric for an asset's worth is its quarterly yield, then yes, gold looks entirely useless.
Makes sense.
But what happens when the pursuit of yield actually puts the underlying principle, your initial hard work, at risk?
Oh, that's a great point. So if our whole culture demands yield, what actually breaks that bias? Because the author didn't just wake up one random Tuesday and decide to abandon everything they knew to go buy gold.
No, not at all. It was a paradigm shift brought on by studying history.
History, right.
The authors stopped looking at the daily charts on their phone and started reading about economic history, the mechanics of inflation, and the anatomy of various global crises spanning centuries.
Here's where it gets really interesting. Because this research revealed a pattern that totally disrupted their modern view.
It did.
They realized that highly experienced generational investors, the kind of families that maintain wealth for hundreds of years, not just a couple of bull markets.
The old money.
Exactly. They consistently keep a portion of their assets in physical gold. The author realizes gold's purpose isn't to play offense.
Right.
It's not there to make you rich quickly. Its purpose is to act as a store of value that actively resists long-term uncertainty.
If we connect this to the bigger picture, that shift from an offensive mindset to a defensive mindset is where the mechanics of investing really get fascinating.
Yeah, tell me more about that.
Well, we naturally think of investing as scoring points. You want to outpace the market.
I get the high score.
Exactly. But a complete financial foundation actually requires a strategy for when the game turns against you.
Okay, let's pause and break down the mechanics here, because we throw the word inflation around a lot.
We do.
Why does a traditional yield-producing asset, like a stock or a bond, suddenly become so vulnerable during an economic crisis? Like, if a company is paying me a 5% dividend, shouldn't I be happy?
Let's unpack the why behind that vulnerability. Cash flow assets inherently rely on a fragile, interconnected system.
Okay.
To pay you that dividend, a company requires a functioning economy, robust supply chains, solvent banks, and a stable currency.
So it needs everything to go right.
Exactly. But when inflation surges, it acts as a silent, invisible tax. Inflation means the fiat currency, the government-issued money, is losing its purchasing power.
So if I own a bond that pays me a fixed $1,000 every year and inflation spikes to 10%, that $1,000 buys significantly less rent, gas, or groceries than it did the year before.
Exactly. The nominal number on your screen might be going up, but your real-world wealth is sinking.
That is terrifying.
It is. The yield becomes an illusion because the measuring stick, the currency itself, is shrinking. Furthermore, in severe crises, the companies paying those dividends can go bankrupt.
Right?
The government backing those bonds can default.
So the very things that make modern assets exciting, their deep connection to corporate growth and economic expansion, become their Achilles heel when the system fractures.
Yes, and this is exactly why the boring nature of gold, the fact that it just sits there, is its ultimate superpower.
Because it's disconnected.
Right. It doesn't rely on a board of directors making smart quarterly decisions. It doesn't rely on a central bank managing its monetary policy responsibly. It requires nothing from the system to maintain its fundamental properties.
Which brings up a term the essay highlights: counterparty risk.
Ah!
Yes, let me be sure I'm getting this right. Counterparty risk essentially means I am relying on the person or the institution on the other side of my investment to keep their promise.
Right. You've nailed it. Every digital asset you own is a promise.
Okay.
A stock is a promise from a company that you own a share of their future profits. A bank deposit is a promise from the bank that they will give you your money back when you ask for it.
Right.
A treasury bond is a promise from the government to pay you yield. Those are all counterparties. And history shows us, relentlessly, that counterparties fail.
Let me try out an analogy here.
Go for it.
It feels like a dollar bill or a digital bank balance isn't actual wealth. It's just a claim check for wealth.
Ooh, I like that.
It's like the little paper ticket you get at a coat check in a restaurant. You hand them your coat, they hand you a ticket.
Right.
Normally, that ticket is as good as the coat. But what if the restaurant burns down? Or, in the case of inflation, what if the manager decides to print 1 million extra coat check tickets and just hands them out to people walking by on the street?
That would be chaos.
Total chaos. When you go to get your coat, your ticket is suddenly completely worthless because the system broke the promise.
That is a phenomenal way to visualize it.
So physical gold isn't the paper ticket. It's the actual coat. It doesn't owe you anything. but nobody else has a claim on it either.
That analogy perfectly explains the psychological turning point the author experiences in the second half of the essay.
Oh, yeah.
Yeah, because intellectualizing economic history is one thing, but the author describes how their mindset shifted once they actually held this physical asset.
Right, feeling the weight of it.
Exactly. They started to experience a profound feeling of relief that they never found when they were just logging in and looking at digits on a bank screen.
Well, right, because looking at that screen means you are staring at a pile of those paper coat check tickets. You're just hoping the restaurant is still there tomorrow.
Exactly. We live in an incredibly complex, highly leveraged global system.
Yeah, we do.
And when you study centuries of history, you are forced to confront a very uncomfortable macro reality. Nations fundamentally change their structures.
Right.
Reserve currencies severely weaken and collapse. Massive, seemingly invincible corporations go completely bankrupt.
It's also fragile.
Very fragile. When you fully internalize how fragile these institutions are over a 50 or 100-year timeline, having your entire life's work tied up in their promises is genuinely terrifying.
It's like building your family's house entirely on rented land.
Precisely. So when you acquire physical gold, an asset with zero counterparty risk, whose value isn't dictated by a central bank, and which is universally recognized as a store of value from Tokyo to London to New York, it provides a very unique emotional anchor.
Yeah.
The author uses this beautiful concept of isolating their energy.
Oh, I love that phrasing from the essay. Isolating a portion of your life's energy.
It's powerful, right?
So powerful. Because when we talk about earning money, we gloss over what that actually entails. It is literal biological energy.
Yes.
It is your time, your physical labor, your stress, your time away from your family converted into currency.
Yes. And by converting a portion of that currency into gold, you are quite literally isolating that expended energy from the risk of systemic collapse.
Wow.
The peace of mind the author finds doesn't come from getting richer off the gold.
Right, because it's not a yield-producing asset.
Right. It comes from the absolute certainty that their foundation cannot be wiped out by a bad political policy or corporate bankruptcy.
It's the ultimate defensive player. It's not trying to score goals for you. It's just making sure the other team doesn't wipe out the points you've already put on the board.
I love that.
And that realization totally flips how we measure financial success. I mean, this is where the author's entire view of money fundamentally shifts.
It is the culmination of their entire journey. The core thesis they land on is that an increasing bank balance does not necessarily mean increasing purchasing power.
So what does this all mean? Let's dig into that because it's so easy for us to get caught up in the video game of modern finance.
Oh, absolutely.
I know I do it. We log in, we see the nominal number in our checking account or our retirement fund go up by 5% at the end of the year, and we celebrate.
You feel like a genius.
Right. We think we're winning. But we forget to ask the crucial question. If my rent, my health care, and my groceries just went up by 10%, am I actually winning?
Probably not.
No. The screen says I have more money, but my life just got harder.
This raises an important question, and this is where the author's journey becomes a lesson in self-respect.
Self-respect, how so?
Protecting the value of your money is just as important, if not more so, than the act of earning it in the first place. The author leaves us with this defining quote. Let me see. Gold is not a get-rich-quick tool, but a store of value. When they make this asset a foundational part of their portfolio, it is an act of respecting their own labor.
It's drawing a line in the sand.
Exactly. It is taking proactive ownership. It's saying, I sacrificed my time and energy for this purchasing power, and I absolutely refuse to let inflation or bad monetary policy quietly steal it from me over the next 2 decades.
It's incredibly empowering when you reframe it that way. It moves investing from a place of fear and blind speculation into a place of profound control.
Completely.
So bringing this all together, we've tracked this investor's mental evolution. They started exactly where the modern financial machine wants all of us to start.
Yep, looking at the shiny objects.
Right, viewing gold as this boring, useless rock because it doesn't pay a dividend. They were completely distracted by the flashing lights, the dopamine hits, and the cash flows of volatile investments.
But by daring to look at the mechanics of economic history and confronting the reality of counterparty risk, they discovered its true function.
They realized that gold isn't supposed to be exciting. Its boredom is its strength. It acts as the ultimate global shield for your purchasing power. It is the necessary, stabilizing counterbalance to all the fragile promises and IOUs that make up the rest of our digital financial lives.
And ironically, having that defensive foundation is what allows you to confidently participate in those more modern, volatile
Well,
investments.
that makes sense.
Yeah, when you know your life's energy is protected, you can play the offensive game without the paralyzing fear of losing everything.
The defense gives the offense the freedom to play the game.
Exactly.
Which leaves us with a final thought I want you to chew on today. We've spent this entire deep dive exposing the illusion of the bank balance, how a number going up on a screen can mask a terrifying loss of real, tangible purchasing power in the physical world.
It's a scary thought.
It is. It makes you wonder, well, actually, if our primary metric for financial success can be that deceptive, what other metrics of success in your modern life are playing the exact same trick on you?
Ooh, that's deep.
Think about your job title, your digital follower count, or even how endlessly, exhaustingly busy your daily schedule is.
Yeah.
Are those things actually enriching your life in the real world, or are they just inflating on paper, giving you a high score, while slowly losing their actual value?
Wow.
Keep your eye on what's real. We'll catch you on the next deep dive.